jumping into what we call the Soundbites portion of this. It's really 5 to 7 minutes of information provided by these panelists or speakers that I've known for a number of years, that are subject matter experts, thought leaders within their areas, and are here really to provide some insights within their particular spheres of influence on what they're seeing currently going on right now within the fintech and innovation space as we're going through these unprecedented times with COVID-19. So I'm going to introduce Carlos. Carlos and I go way back, even prior to Fintech Connector. Outside of the roles that he has at RGP, which we'll briefly talk about, he is an advisor for Fintech Connector, but we go way back with other community organizations on the nonprofit side, Alpha, which is the Association of Latino Professionals for America. And I mean, just also, he's now the New York chapter president of that organization, which is the largest in the nation. So Carlos, thank you for being here today. Carlos Mendes, that is. Please, the stage is yours. And for everyone on the line, please post questions for Carlos. He does have to drop off early because he has another call that he has to attend, but I will make sure he gets your questions. Thank you. Carlos, yours.
Thank you, Angel and Jonathan. That was quite something. You know, your insights are always second to none. And when I met you in Mexico, I knew that the stuff you're doing is just phenomenal. And especially in the current, market conditions with COVID, that you're still looking at funding and supporting, businesses out there. I think that's really important. So thank you for that. To everybody that is online, thank you very much for dialing in. I know that some of you may be around the world and it's nighttime. Others are still waking up right now, and others have already had probably a full day, especially if you have families like me where you're having to take care of the kids together with your partners and having to do homeschooling. And if like me, I'm pulling literally my hair out with these things. So who am I? I'm Carlos Mendes. So I've been involved with Fintech Connector for the best part of 3-4 years now. Very much aligned with Angel's vision of driving, what he's doing with Fintech Connector at enabling the businesses and connecting everybody for the greater good of the world. My current role at RGP is I lead the Northeast market, which is basically the 8 markets, anywhere from Philly all the way up to Canada. So it's a pretty, wide role. And I retain my hat for financial services, given that we're servicing 8 of the top, global banks, and we have some of the most amazing, fintech companies, including some of the unicorns that you hear every single day, where we're helping them to scale up their businesses and manage the way they do things. And then my third role is focused on growing LATAM. So I spend a lot of time in Mexico and Brazil. Brazil and Portugal are close to my heart, given that's my origins. So anybody out there that fala português, me manda email, né? Pra gente falar. In terms of additional things of where we are moving, COVID has obviously impacted everybody, greatly. Just before, COVID went up, I'm gonna see if I can share my screen. I assume you guys can see it. There was a recent, study by McKinsey on the COVID-19 briefing, where they went through kind of 9 major scenarios of the impact of it. And I'll try and summarize this as fast as I can in the best way possible. On the left-hand side, you got how the virus spreads from becoming better to worse case scenario. And then on the bottom side, you got the knock-on effects from the virus and any of responses or non-responses from governments or local organizations to meet economic policy response to address the economical impact. What I tend to focus more, and this is a personal perspective, is that scenarios A1 and A3 that you can see on the slide. A3 is focused on the virus will be contained with a slow recovery. So think about the containment for US and LATAM likely to take place by mid to end of May, no matter what a lot of people are saying, versus the virus recurrences we're containing it, but it keeps changing time after time and coming back as the immune systems, we learn that not addressing, as much as we thought, of the recurrence of the virus, which means that gradually that will have a kind of a world impact on the recovery of organizations, how they can come back to the new norm of business as usual. If you think about the virus slow containing, GDP will drop between 2 and 4% in a slow recovery model. We are likely to return to kind of pre-crisis model by Q1 of 2021, and then that assumes that people will gradually get back to work by July 2020. And in talking to a lot of the banks and fintechs and other organizations right across the industries, that seems to be the model, at least for the US and Latin, that we're going to likely incur. The second model is more of an extreme one with the virus recurrence. It'll be a slow long-term growth. GDP will decline by 35 to 40%, by the end of 2020, and that really means that you're going to have a drop of 6 to 9% in totality. I think Jonathan alluded to the 15-20%. I personally believe that we're going to end up having closer to 30 to 40%, economic decline from a jobs perspective, and I think that poses a lot of questions for what the regulators and governments actually can do in that space, both in Mexico, Brazil, Argentina, Colombia, and in US itself. If you think about Mexico right now, with the Fintech law, they were going to release updates to the law. Some of those elements have now been delayed, to next year, where they are trying to create a more equitable playing field for open banking between, the bigger banks and the local fintech companies. And I think it's really important. I wish they wouldn't have delayed that, because right now that's what the startups and the fintechs actually need, is to become, a playing level field for everybody. To get back to pre-crisis, you're really looking at, anything between 21 and 22, if you have a true world, slow recovery in the model. Let's see if I can move that. When it comes to fintech deals, we've generally seen a huge decline. We're kind of back at 2017 funding, levels. If you think about Q4, it was around 11 billion in funding, and then in Q1 of 2020, we're looking only at 6 billion. And this has been really kind of the time when it's been impacted. A lot of the stuff we knew that in China, there was already impacts taking place back in December. And then since January and February, pretty much a lot of the funding has kind of, dried out. But more importantly, what does it actually mean, for the fintechs? I always tend to kind of put my hat on, like if my business was to become insolvent, what would I need to do as a company? And generally it's about fortifying kind of your cash position and thinking about doing like 13-week cash flows for your business, so they can manage cash in, pretty aggressively in terms of containing costs and then driving, more profitability in terms of your model. And you'll find that most of the funding that is taking place right now, and where investors are literally being very cautious of what they're investing, there's very little for early stage fintech startups, because you're competing now with larger firms, and so they're taking the bigger sizes of the pie as people have kind of got scared with investment. There are plenty of opportunities with economic slowdown, even though consumers are spending a lot less. And I think if you think about the opportunity, like like Cabbage, for example, on small business loans, they literally repurposed their solution to help some of the SBAs in the US to kind of do the loan processing for them, so they can actually help people get closer to those dollars that will help their businesses. And there's many others that are out there that are giving good examples. I think the economic relief and the government stimulus that are taking place, at least in the US, those are a good start. And I think pretty much every fintech and startup out there should be focusing on getting their access to those fundings. There will be additional, kind of the stimulus packages that are coming through once we get over the hump of, the politics needing to be set aside. The other thing I think that is an opportunity for us as fintechs is to continue, talking to each other and helping each other and sharing, knowledge and expertise and complementing each other's in an ecosystem that is getting really aggressive in the marketplace.
Is that it, Carlos?
Yes, that's it.
Do you have time? I know you have to drop. Yeah. Do you have time for one question? There is a question.
Fantastic.
All right. So, Alberto Barbo, would you like to ask your question?
Yeah. Hello, Carlos. Nice to hear that you speak Portuguese as well. Maybe my English is a little bit limited, but do you think that emerging markets, the MPE, the medium small business, can wait to return to market as the stimulus money the government are offering? Like in Brazil, 5 banks have more than 80% of the market share, and the money is not coming into the business hands. Mm-hmm. So how do you see the opportunity for fintechs to be between the government and the business and bypassing the traditional, the incumbent banks?
I think the opportunity is there. A lot of the smaller players and MPEs need to be a lot more aggressive in pursuing opportunities and partnerships with local banks. Most banks are struggling and stumbling through what they're doing right now, and they're almost like closed shop. I was talking to some of the guys at JP Morgan, and they're just literally kind of almost slowed down providing like mortgages, for example, to everybody, or they've increased the bar to get approvals and how much money you have to put down to buy a house. When it comes to lending to small, and medium businesses, they also have increased, the bar in terms of what you have to prove, that your business has a viable revenue business model. So I think the most important thing is to look at, what is currently selling from a consumer perspective across the market and target those areas.
Sure. Okay.
And I think there's an opportunity in the low one space to create additional, cash kind of markets with digital currency payments and all kind of stuff right now.
Mm-hmm. Well, also I'd like to just to complete your talk, what you are saying. I seen a great opportunity for a fintech to offer these MPEs real guarantee, so they can reach credit in the incumbent banks.
Indeed, and there's a startup, for example, here in the US that has partnered with one of what we call the Big Four companies to create a platform to help some of these companies. And there's investors in California that are focused, for example, on Latino businesses, kind of help them out right now, get off the ground. They've lowered a lot of their own standards in terms of what kind of funding they would provide and how much, equity they would take in those businesses. So they're there to kind of help people versus trying to cannibalize everybody.
Well, I'll send an email later just to show what we are working on here in Brazil.
Yeah.
Okay. Great. Thank you, Alberto. Thank you very much for that question. Carlos, I know you need to drop, so I really thank you very much for providing your sound bites and the information that you presented on the screen. So if you have additional questions for Carlos, please post them and I'll make sure that he gets them and he'll follow up with you afterwards.
Thank you, guys.
Thank you, Carlos. So our next speaker is Narayanan, and he's going to provide our sound bites from his perspective and his sphere of influence. And just so you know, Narayanan is based in Bahrain, and I know Narayanan now for a number of years. He started out as a community partner in Bahrain, but ultimately became an investor in Fintech Connector. So we really appreciate all the work and that he's done to help us grow and to where we are today. So Narayanan, I'm going to pass it over to you, and we're going to go back now into the mode that we're going to move on to additional sound bites. So if you have questions, please post them with the name of the person, but we're going to open it up to everyone later on, so that way a number of our speakers could answer your questions as well. So Narayanan, over to you.
Great, thank you, Angel. Can you hear me first of all?
Yes.
Okay.
Yes.
Great, lovely. So good morning, good afternoon, and good evening to everyone, depending on where you are, which part of the world. My name is Narayanan Ganapathy, and I am a strategic advisor to Fintech Connector, as well as the community partner for Bahrain. My association with Angel dates back to mid-2017, when Fintech Connector was still very much at the drawing board. And I did meet him at the bar in New York City when I visited New York in July 2017. It's been an interesting journey over the last 2.5 years with Angel, and great to see the progress and to see the number of members reach 2,700. My day job is that of the CEO of an angel investment firm called Angivest Ventures, which is essentially operates as a single family office fund investing in early stage ventures globally. We've been 6 of them have incidentally been in the United States across various verticals, fintech being one of the key focus areas as well. Over the last 2.5 years of our role as an angel investor, we've actually seen a lot of pain points that we ourselves faced as angel investors. And we've also seen and met and interviewed well over 200+ entrepreneurs across the world. And we figured out what their key pain points are as well in terms of fundraising. And bearing those 2 pain points in mind, we have also decided to launch a fintech platform of our own, which is in the equity crowdfunding space, which leverages blockchain by enabling issuers raise capital to the platform by issuing securities tokens. So the platform is yet to be launched, and we'll be working on the IT development. So that said, with my background, what I'd like to dive into is, as an investor, I'd like to talk about the impact that COVID-19 has had on our portfolio companies. So really, the implications of COVID has been on both ends of the spectrum as far as our portfolio companies are concerned. On the one hand, we've had companies which are in the business of online retrospective apps, which have surged in business. So the revenue, the number of users have exponentially grown over the last couple of weeks. The latest number that I hear from one of our portfolio companies is that the signups have been 8x of what it was 6 weeks ago. And that's essentially, no price for guesses there. It's because of the work from home culture that the entire world has adopted over the last 3 to 4 weeks. So clearly, this line of business, any line of business, whether it's online meetings or retrospective apps that enables working from home, team collaboration remotely, certainly tends to do well. So one of our portfolio companies has certainly done well. The other company which has also benefited is a health tech platform for health systems to track and share medical devices across various health systems. So this is one of our investments in the United States again. They have been chosen as a platform to provide the dynamic ventilator reserve program to help reach these ventilators across the entire country of United States, which cuts across several health systems in the US. So they have certainly benefited, notwithstanding that the sales cycle of such businesses tends to be pretty long. So it's really two large factors that are driving businesses to prosper under such circumstances. Number one is the changes in consumer behavior as a result of the way lives of normal people have been affected. Number two, the demand for specific products, like in this case, the healthcare platform that tracks and helps share medical equipment across various health systems. That's a demand for a specific product resulting again from an event such as COVID-19. So those businesses have benefited and have seen, been on the positive side of the event. But like in every case, there has to be a negative side as well, or not so positive side. We've had companies dealing with the wrench thrown at them by COVID-19. And these are essentially companies that had planned to raise capital or raise their next round during the first quarter of 2020. And they've definitely had to push back their fundraising plans, mainly because they know that the perceived valuations for most businesses tends to be much lower or a fraction of what it used to be maybe a couple of months ago. So even if businesses are doing reasonably well, we do see founders pushing back on their fundraising plans. And in turn, what it means is they've had to do significant cutbacks in terms of putting a hiring freeze, cutting back on marketing spend. So today, there aren't too many dollars chasing growth. In fact, there isn't dollar chasing any growth at all. It's all about dollars for survival, as most of the VCs in this region would agree with me, where they prefer to put their money as part of follow-on funding to help some of their portfolio companies survive. So on the not so positive side, we've had some fintechs as well facing challenging times with their sales pipeline being affected, especially those that have B2B clients or banks which have slashed their budgets on discretionary funding, as a result of which the fintech's sales pipeline have been adversely affected. So with that said, I'd like to talk about the fintech ecosystem in our region, the MENA region, prior to COVID-19. So up until February, the fintech ecosystem was growing absolutely fascinatingly in this region, largely driven by various factors such as the demographics. So GCC is one of the highest per capita in the world, around $29,000. Plus the internet penetration and the mobile penetration is pretty high, in excess of 90%. And with a lot of government support and involvement in helping the ecosystem thrive with regulatory sandboxes, as well as fintech funds and accelerators, the region up until the early part of Q1 2020 was growing with well over $250 million plus invested in fintech companies in startups in the MENA region. However, post-COVID, as one would expect, there has been a stark decline. We do see that the deals in the month of March have shown a 67% decline relative to March 2019. So it's a pretty significant one. Although up until February, that was not the case. And fintech, and I'm not talking specifically about fintech, it's the overall startup ecosystem in terms of the number and the 67% decline. But fintech's contribution to the startup ecosystem hasn't changed. It remains at approximately 15% of the total startup ecosystem here in MENA, which basically means that even fintech has suffered a similar percentage decline in terms of startup funding raised in March. There are, if we were to look at various segments within fintech, we could divide them into payments and remittances, capital markets, wealth management, insurtech, And the largest component in the Middle East driving fintech is the payment and remittances, and that's largely because of significant expatriate population, which drives a lot of demand for payments and remittances outside of the country. So from a COVID perspective, I'd say that those fintech businesses that are still catering to the consumer and the SME segment with a defined or with an acquired customer base, they are continuing to do reasonably all right. But it's those fintechs that are dependent on banks and financial institutions. Like I was speaking to one of the fintechs, one of the CEOs of the fintechs here in the region, which did exceedingly well last year in 2019. They have had to actually suffer because of the sales pipeline completely vanishing as banks have slashed their budgets down. As a result of which, they had to put off their fundraising plans, and they replaced that with a liquidity funding plan where they're raising a short-term money at paying a very high premium for that money. So those fintechs that are dependent on B2B businesses, they have suffered largely. With reference to what we are up to as an investment firm, we do realize that very early stage ventures don't tend to do well, especially those that do not have cash under their belt, because today cash is king. Cash preservation tends to be the key mantra and the most important point that most small businesses look for. So when we look at investments, we continue looking at investments, but we are paying a lot of emphasis on the unit economics. Probably 6 months ago, a year ago, we used to see a lot of B2C businesses which used to pay a lot of money to acquire customers. Imagine paying money to get them to become your customers was a pretty common phenomenon. And that clearly, from a unit economic perspective, doesn't make sense at all. And we do see a lot of VCs, looking at the unit economics in detail with a fine-tooth comb. We also look for the increased relevance of the business model, because we do expect a lot of fintechs and the startups in general would have to repurpose their business model to take into account the current consumer behavior patterns and business behavior patterns. That is something which definitely would be looked at with a fine-tooth comb. Valuation is definitely nowhere going to be where it used to be three months ago. So we do expect to see the entrepreneurs adjusting their value expectations done. And amongst the other factors like the rationalization of cost, reducing the market spend, and the strength of the team. So what our plans are for the next 3 months, we are going to be focused on continuing to develop our fintech platform, which I alluded to right at the beginning of my talk, where whilst the outside business is affected adversely, we can definitely continue to develop the ID platform, liaise with the regulators, and getting our legal structures in order and getting the infrastructure in place. So that's what we really are utilizing this time for the next 2 to 3 months till there is some visibility in terms of how things are going to unfold. In terms of sectors, we would be looking for health tech, anything to do with online, like online facilities management platform. We are in discussions with one of the startup founders for listing into our crowdfunding platform in that space, as well as education technology, which we believe would be one of these sectors which would be positively affected by COVID-19. So with that, I am going to pause here. And Angel, I don't know whether you have any Q&A.
Well, we will, but we're going to have to keep it together because we want to make sure that we get through all the other sound bites, just in the interest of time as well, since this is only one and we have other things. So thank you very much for that, Narayan.
Thank you.
I'm going to move over to Fabian, who is our community partner. in Switzerland, and we met in New York about 1.5 years ago. And you know, he's Mr. Fintech in Switzerland. So I'm gonna pass it over to Fabian. We are running a little bit behind schedule, so we definitely need to try to keep on point with the 5-minute soundbite, so we can have enough time for Q&A, because we do have something that we need to present at the end as well. So Fabian, I turn it over to you.
Yeah, thank you very much, Angel. I know we are short on time. I'll try to be within this 5 minutes. Yeah, so I'm Fabian. I'm from Switzerland. I'm half Swiss, half Portuguese. And yeah, I worked in private banking for 15 years until last year. And for 2.5 years now, I'm also a business angel focusing on, as a banker focusing on fintech, of course. And yeah, during my time back in 2018, working in New York, I met Angel. And then I decided when I come back here to Switzerland to focus more on fintech and startups and the ecosystem to enhance the financial sector. And I quit my job, and now I'm working for a private equity fund for a large asset manager here in Switzerland. And yeah, beside that, I'm also founder, co-founder and co-CEO of Price Hunter app, my own startup. And I will use the time, my 5 minutes here, to talk about payment and advantage of Corona, the Corona offers. So Switzerland is known as a conservative country in terms of digital payment. And in Switzerland, we have around 60 to 70% penetration by paying in cash, so only 30% digitally. And by talking to friends and family, and also my customer, or the customers, when I was in the private banking, people here that are concerned about their data, and they say they don't want to use credit card and other digital payments because of the tracking of their data. And now with COVID, when I go to stores, what I notice is that you're not allowed to pay cash anymore because of security reasons. And by talking about numbers, when we look at Twint is like to compare with Venmo. It's digital wallet in Switzerland where you can share payment with friends, pay at the cash register. They disclosed numbers and had a decrease of daily new registration of over 100% now in these times. And also a credit card provider in Switzerland, they just announced at the beginning of this week, I think, that it's now possible to pay contactless without entering the PIN, so without touch anything, was increased from 40 to 80 Swiss francs. And today, the country of Liechtenstein, it's a neighborhood, it's a small country, they just announced they brought out the Li-Pay. So it's Liechtenstein Pay, don't confuse with Alipay, something different. Yeah, it shows that banks that had something in the backlog, they now have to hurry up to come out with their digital payment offer during these times. So people now realize also in Switzerland that they have to use digital payments and they cannot use their traditional Swiss debit card called Maestro card to pay in the shop. So if they want to order food or goods on the internet, they have to use this digital payment like Twint or PayPal or credit card. And the current situation shows the evidence of what I'm always proclaimed. Fintech evolution pre-COVID and the Western world, and now especially talking about my region here, Switzerland and around Switzerland, we're having a problem of prosperity of the people because they don't have to use digital payment to buy food. So at this point, I also like to refer to the Maslow pyramid. In China, for example, fintech is a revolution. In 2008, when the new infrastructure came out called smartphone, fintech skipped the banks and gave access to people in the rural region to buy food and buy goods through the internet. So by having a deeper look at the Maslow pyramid, I want to do the link to InsurTech. We have physiological and safety needs, at the bottom of the pyramid. So when you have a look at the pyramid at the bottom, and in the combination with social distancing, this leads to a higher demand also for insurtech. So now you really have to cover your basic needs in combination with social distancing and this virus. You have to use digital channels. So even the big guys in insurance and also banks, they will now notice the lack of digitizations, and this is a huge chance for fintech. And yeah, just to close my 5 minutes, I also want just because it's very just released today, by talking to my friend in Germany to talk about the fintech during this Corona times. We talked about other companies, and it's interesting. Before Jonathan, we talked about B2C, that they have some problems now, and when looking to tech companies, tech startups, we have in Germany one, we also have in Switzerland. Talk to those in Switzerland. They are having a higher demand for their services because people, they have to do their tax. They cannot go to their tax advisor. They have to use this new technology. And TaxFix, it's a German startup. They just announced today they raised $65 million with a new investor out of Geneva, Index Venture. And they have a huge demand of their solution, and it's a B2C model, so it's very interesting at this point. And another startup offering liquidity planning software. They have a huge demand, but here the problem is they have a very good business model. They have a huge demand. Salespeople are working 24/7, but they're lacking on funding. So either you have a good business model, you have funding, you're okay. Even if you have a good business model and you can't secure funding, yeah, you're lost. And yeah, if you want to know more about investment in this time of Corona, you can reach out to me. I had more information here if you want. Yeah, thank you very much.
Fabian, thank you very much for that. And by the way, just for everyone, we will be providing the recording of this as well as the contact information for our speakers later on, either later this week or early next week. So if there are certain questions that you want to answer for them specifically, you could then reach out to them. So let's move on. Our next soundbite is coming from a gentleman who runs open innovation and partnerships at DEMTECH out of Madrid, Spain, but yet their company DEMTECH has connectivity across Europe, Latin America, and Israel. So Carlos Gutierrez, welcome to FinTech Connector, and you're up for your 5-minute soundbite.
All right, thank you very much, Angel. I really appreciate it. Basically, as Angel was mentioning, yes, I work at DEMTECH International. We basically are an open innovation, consultancy, and sales acceleration firm that have been working on the Israel market, also across Europe, and also Latin American markets. We basically help expand the fintechs across these regions. Also, we help and run challenges across many sectors, including financial services, especially working alongside with banks. And also we work with certain venture capital firms providing consultancy services for their ongoing or their own company portfolio. Basically, I came alongside like about 10 years working on the banking industry, in the banking industry. I started back in the days in Latin America, and then I moved all the way up to Europe. So it has been really an exciting experience. I just wanted to make these talks and these sound bites a little bit about what's going on in several aspects. So as you may know, cybersecurity has been at a peak. It has been actually raised. According to the magazine, one of the magazines on cybersecurity, basically they were mentioning that it's about 667% raise on phishing attacks due to COVID-19. And if cybersecurity was raising at a steady step about 30% per year, I believe that it will keep on growing, especially right during this entire year. Also, we have another example how COVID-19 is affecting is especially the position of chief data officers. So basically right now, all these chief data officers are right now doing new type of modelings, right? In which they have to incorporate new data, in which data becomes crucial for taking decisions and immediate at times. So how can we apply this to banks? Basically now banks, they have to adapt to this new normality. I believe that everybody is having this sense about what's the new, such thing to say. And then, of course, how we're going to offer new bank loans, how we're going to offer new credits, what is going to happen with the consumers. So this aspect is really crucial and is really important in terms of payments. We might have several trends, especially in this sector. Fabian was also mentioning some of these ones. You have a thriving cashless society through NFC payments. This is one of them. But also all of the rest of the financial technology companies that are pushing mobile payments will also increase. You have also an increase about barcodes and QR code uses. This is one of the things. And you might see something that is interesting regarding fintechs as well, is how they are able to help bank with omni-channels. Before we were speaking about how robot advisory or robot chats were helping on the onboarding of new customers, but now everyone is more like being more humanized, and now we're seeing again that CTI systems will help on the bankerization process of new individuals. This is something that was a current that was a stop, and now is again on the move. Nevertheless, we're seeing some general aspects within the entire industry. One of these is, like, for example, more solidarity aspects that, for example, some of the PSPs and acquirers are as well waiving some of its fees or sharing transaction liabilities, which is of interest. Also, in our sense, we see a lot of opportunities. And one of our attendings, Alberto, was mentioning about concentration of banks. These banks are really huge players and they will not move as fast as fintechs. So of course there will be fintechs that will go and have these type of opportunities to gain this market. If they were doing it before, now is even the time to do it. So these are some of the key criteria and aspects that how fintech industry will change along the time. Definitely, we are seeing new movement, and not all the market will be a stop. We think that is just a matter about time. That I think we'll keep track again about how we proceed. As a resumer for this talk, and this Soundbites will be definitely cashless society, omnichannel, new data and financial models will be of importance, and cybersecurity. So these are my 4 main topics and themes that I want you to have in the top of your mind. This has been just I know really short 4 minutes presentation, but if you have any questions, please feel free to do so. Take care.
Carlos, thank you very much. And I just want to just mention specifically, there's a lot more that we're going to probably be doing together with DEMTECH. So we should definitely look for events coming shortly, probably in May and June, that we're going to be bringing some more of these insights that you just mentioned here on this call today. So Carlos, thank you very much. I know it's short, Soundbites are quick, but I really appreciate your insights, and hopefully everyone on the line appreciates it as well. Our next speaker is Rashid Mays. So Rashid and he's one of the original, at Hurley's. And so, based in Washington, D.C., technologist background, financial services, Capital One for a number of years, and now with Aerospike. So Rashid, I'm going to pass it over to you. Give your sound bites. Tell us a little bit about what you're seeing and what's going on in this crazy world that we're living in right now. But so over to Rashid.
All right, thank you. Can everyone hear me? Good. All right, so I'm Rashid Mays, and I lead solutions engineering for Aerospike. Aerospike is a data software technology vendor, which is based in Silicon Valley. My typical day begins with helping banks in the UK and ends with helping financial services, usually smaller institutions in Silicon Valley. Our technology sits at the core of fraud detection, personalization, and payment settlement use cases. As an example, consider fraud detection. For a transaction, you may have only milliseconds, 300 milliseconds to decide whether or not a transaction is fraudulent. The more data points that you can examine during that time, the more accurate your decision can be. Our technology makes it possible to access millions of data points per second. So think about running 8 million transactions per second, really scaling to the new internet scale that we see. Pre-COVID-19, we saw businesses increasingly leverage the cloud, newer application architectures, moving away from bare metal and monoliths, starting to look at Kubernetes, serverless, container orchestration platforms, in addition to Kubernetes like HashiCorp. First starting, it was lift and shift. So I have my traditional data center. How can I mimic what I have in my traditional data center within the cloud? But now we're seeing organizations leaning towards cloud first. Now can I really take advantage of what the cloud offers? For example, the cloud offers elasticity. We talked about service architectures. Most important is controls and compliance. So can my infrastructure scale and ebb with demand? As COVID-19 takes its course, we see consumers shifting from cash at point of sale to contactless and digital payments, a lot more digital commerce. Can my infrastructure change to accommodate that without having to redeploy systems? So it's not about just being in the cloud, but how can I, with good governance, take advantage of what the cloud offers? So for example, do I need EC2s, which is akin to your traditional server infrastructure where you may have a microservice, for example, say account summary. So when a user logs in, you have a microservice that displays their account summary. That may take a full EC2. In a new world, that may just take a container which is running on the EC2 along with many other services. And when you have more load, that service can be horizontally scaled out to other EC2 instances, which is independent of the actual service, knowing the hardware that it's running on. In addition to Kubernetes, you may have Lambdas or Lambdas at edge, which are serverless technologies, which allow you to actually deploy functions without having to manage infrastructure. COVID-19 has placed an emphasis on cost, resiliency, business continuity, and service locality. Do I have the tools and automation in place to ensure that my business can continue to deliver services if large segments of my workforce are unable to report to their primary location of work? So for example, in the old world, you may have had one person managing a collection of machines, maybe 80 servers. In a cloud environment, you can have one person, especially with automation, managing hundreds of machines. So think of, instead of 80 machines, now that one person can manage 180 machines. So the number of people that you need to manage equipment is augmented with automation to reduce that overall number. Another question, how do I ensure that I can provide the service level that my customers expect, but scale infrastructure with demand and control costs while I'm scaling up with a certain level of resiliency? So when you scale up or you ebb and scale back, you don't want to reduce resiliency. You know, we're in this 24/7 world. People are increasingly relying on digital means. We have custom consumers who are mobile first. So they may have much more chatty applications. You want to make certain that you have the infrastructure that can meet those demands. So whether it's a Cyber Monday, a Black Friday, if it's one of these events which causes consumers to want to interact with the services, you have to make certain that you can scale as quickly as possible to meet that demand. The next piece, I would say that looking forward, I believe that we'll continue to see innovation from the upstarts, the challenger banks. I think open banking has been a great innovation in the recent years. If we consider Visa's recent investment in Railsbank, not only that, we have a number of application first, I would say mobile first banks which have sprouted up in the United States over the past few months, including N26, Chime, Revolut, Monzo, Level, and Simple. I think we're going to see more from technology companies blurring the line with financial services companies, and also financial services companies shifting to become tools which can enable those technology companies. So for example, opening their services to APIs which can do identity verification, or supply banking in a box for some of these upstarts that want to offer different services on top of core banking services for consumers. Thank you.
So thank you very much, Rashid, for that. And again, thanks everyone as well. Continue to answer the polls. It's great feedback that we're getting, and we're sharing that as we go along. Last but not least, Dean, how are you? So Dean and I, we had an opportunity to meet back, I think it was last year, in April of last year, almost a year ago today, introduced by two of our community partners here in New York, John, Liz, and Ms. Backus, who introduced us. And they were doing some great stuff, or are doing great stuff in the state of Arizona, building one of the first fintech sandbox in the U.S. So Dean, I'm going to pass it over to you, introduce yourself, and tell us a little bit about what's going on in Arizona and the western side of the United States.
Well, thank you, Angel. Everybody can hear me okay? Yep. Okay, yeah, so Dean Sheppard, I'm with the Arizona Commerce Authority. That is the state of Arizona's economic development agency. And unlike many of the panelists, I am a government person, and I'm a longtime economic development person. So economic development really is about, my role specifically is about net new job creation and support to the state of Arizona. We leverage several facets in that opportunity to present the business case to a company considering expanding west. And really, Arizona, fortunate to be led by a pro-business governor, Governor Ducey, who comes from the business community, understands business acumen and language when we start talking about cost of goods sold, P&Ls, and all of the different life-sustaining measures a business has to evaluate to be viable and sustainable. So what's been happening in Arizona, it's really a question of diversity, well, more of a question of density, if you will. Arizona is a little bit more geographically spread, if you will, and the Phoenix Metro, which is one of the, I think the 5th largest metro or city in the United States, has seen activity, but not as impactful as a New York City or a San Francisco, I think mostly because of density and the collection of the variety of people that are in proximity to each other. We continue to be we have been growing at a very quick clip compared to other markets. Our Maricopa County, which is about the geographical size of Rhode Island, is more in the central region of Arizona, has been the fastest growing county 3 years running. And now Phoenix, the city of Phoenix, has been one of is the fastest growing city in the United States that named this last year. So we see a net migration of capable and skilled workforce and what have you. And that's really part of the business case is the workforce, the talent pool, the real estate component, and of course the cost of doing business. So we have seen a result of the COVID, a slowdown in particularly business attraction efforts. Many projects that I have been working are either paused or delayed, or let's take a wait and see attitude. But I also think that we're going to have a significant changing dynamic in the world of economic development. And so, when we start talking about post-COVID, I think there's more questions than answers right now that I could ask. More questions is Wi-Fi, for instance, a public utility? Before, it's been in Arizona, primarily provided by private sector companies like Cox and what have you. Is that a public Wi-Fi? Is Wi-Fi a public utility like water or like power? Because it is an integral part of our daily activity. That's a question. How will states respond as far as support? Primarily in Arizona, part of the incentive programs that I manage and that we present to businesses are predicated on a brick and mortar application. Well, we've all proven that we can be diverse in our or virtual in our workplace and be as productive. So will states now accommodate to being, as opposed to a centralized employment center, a diverse employment center? So now how does that affect rural areas? And how does connectivity connect rural areas in the ability of a business to function as it did pre-COVID-19? In Arizona, we're one of the first states to have 5G. We've outlaid 5G in partnership with Verizon throughout the entire state of Arizona. So now every area is as connected as whether it's rural or urban. So these are some of the things that I think are going to start percolating to the top. I think smart cities. What does smart cities mean? You know, you have sensors that identify different attributes of what's going on as far as traffic patterns and what have you, as the city functions and as part of the city services. So how is technology going to integrate into being better, smarter, faster? Artificial intelligence, how is that going to integrate? And is that the big brother, or is that an actual tool to help produce a better quality of life? And what is the definition of quality of life now? And so there's a lot of things that I think are resonating to the top that elected officials, community leaders, you know, and then of course state and local employees are going to have to really bond as far as providing a solution that's in best case for the residents that they serve, the constituents that they serve, the business community, and more, I think, as a regional approach, as a country approach, as opposed to just a more, you know, isolated approach. So I think that's what's going to be happening. And again, there's a lot more questions, I think, than answers at this point, but it certainly has identified several weaknesses in our economic format. But now the opportunity is to provide results and solutions for those questions. And I think that's where fintech and other emerging tech will certainly come to the forefront, whether it's speed of currency, protecting the data that's flowing, and all of those different questions. So that's kind of my quick, I think that was in 3 minutes, just to hopefully make up some time for Angel. But again, thank you so much. Really appreciate being part of this really astute and esteemed panel. And Angel, thank you for inviting me. And again, Arizona has a lot to offer, but so do many other areas, and many other areas have been responding as Arizona has been. And really, at the end of the day, what is the best situation for residents to come out and thrive and be productive? And I think also fintech and what this is going to do, as kind of a closing statement, I think we'll see more of a disbursement of revenue, more disbursement of funds for in ways we haven't seen before. I think that'll be an interesting format on how technology plays into that and how states support it.
Thank you very much, Dean, for that. I really appreciate your sound bites, and you know, we get this format. I like this format, the fact that everybody provides sound bites from around the world, different areas of experience, and something that we'll continue to do. It feels a bit rushed, but I think ultimately, I think there was a lot of great information provided. So thank you.